Alrighty, what is going on, guys? Welcome back to another video, and in this video we're going to be talking about AlgoLabs and what I've been literally doing the last couple of months and why I haven't been posting a lot of videos. So the reasons why is because I was in the process of making and basically creating my new company AlgoLabs, and just basically going into all the infrastructure and just the coding bits and stuff like that. So, I have a lot of questions. What is AlgoLabs? So AlgoLabs is a trading algorithmic company, and our whole solution, our whole goal is to provide trading algorithms to the public. And so what makes us completely different from most other trading algorithm companies is that we're not aggressive at all. Like, we're very conservative, we're very consistent as well. With a lot of trading algorithm companies, they're not even traders, right? They're not even traders that made those algorithms. They're just coders who just went through a whole process of trying to find something that's profitable, something that has a huge win rate, typically going through a grid system, a martingale system, or an order stacking, cost averaging kind of algorithm, which will make a lot of money in the short term, but most likely over 90% or 100% will blow your account within a couple of weeks to months, right? So those type of algorithms are just not even, like, that's just a laughing stock, right? They're not even algorithms in my opinion. They're just basically gambling freaking softwares. So what I do here in AlgoLabs is completely different from most people, right? So, or for most, I would say the retail trading algorithm companies out there. And the reason why is because I have a procedure on making these trading algorithms. I had professionals constantly mentoring me and teaching me over more than a year, and I was able to design my own algorithms based on my trading systems, right? So what I've been trading the last couple of years has been mechanical level scalping system and swing system, as well as the new system that I created over a year ago, collapsing emerging EMA. So I've been trading those systems for quite a while now. And I have trading experience, right? I have lots of market experience, and that's one of the key aspects whenever it comes to creating your own trading algorithm that's actually robust, profitable, logical, because you know how the market operates. So all you have to do is just basically code your ideas, code your systems, and go through the whole procedure of creating a robust and effective trading algorithm. So, I was able to do that with my current trading systems, and I have the results for you here today. And so my plan with AlgoLabs is to make it one of the biggest trading algorithm companies in the world, because I want to show kind of the world what professional algo engineering actually looks like. There's a process. You can't just, code a random algorithm and just go through this heavy optimization phase and see if this algo can become out of the mist profitable, and there's no logical reasoning behind that system. It's just a random indicators with 10, 20 indicators or whatever, and just trying to mix and match and see which one works. That's not really algo engineering. Professional hedge fund traders, they don't do that, right? They have ideas, they know logical points, they exploit specific edges in the market. And that's what I do. I exploit specific edges in the markets, and that's why my algorithms are profitable. They've been robust, they're long-term effective. For example, collapsing emerging EMA algorithm, which is called Morningstar, I exploit an active edge that happens on indices. And what happens on indices is that you'll see very big market swings on the market open, and you will see specific patterns that emerge during those periods of time where you have a potential of a collapse or emerging kind of area where you could see a huge kind of profit gain in either direction. So I was able to exploit all these edges in the markets into my algorithms, and I think that professional traders do that. And I think the number one way to build a robust and long-term effective algorithm portfolio, right? You want to make sure that all those algorithms are exploiting an edge or diversified with different markets, because that's obviously key. And so with AlgoLabs, what I'm planning to do is that not only will you guys have access to all the algorithms that I have right now, but you guys will have access to more algorithms that I come out with. And so my plan, hopefully, is to come out with one algorithm per month. Now that's very fast, so I'm not going to make no promises, but the whole point of AlgoLabs is to be much more cheaper than all the trading algorithm companies, as well as having access to a bunch of algorithms where you guys can choose your own risk, and while you guys can as well build a portfolio of robust, effective algorithms that are diversified with different markets. That's my plan, right? That's what I'm currently trying to do, and I'm in the process of doing. But right now, as AlgoLabs will be officially launching, to give you guys a perspective of the process of algo engineering engineering the right way, the professional way. Whenever you exploit a specific edge, you're looking for a long-term effective algorithm is, of course, walk-forward optimization, blind testing, as well as, making sure you're backtesting the right way and you know that your system is logical and that, there's no overfitting. Overfitting is something that happens literally in so much trading algorithms. You have coders coming out with these 80-90% win rate algorithms, and once they start putting them into the live market, it starts losing money, right? It's a big thing that most people don't really know about is overfitting, as well as making sure your system is statistically significant and it's robust throughout all these different market cycles that happen in the market. You gotta make sure that not only are you taking data from 100 trades, 200 trades, but lots of data with different kind of market cycles and making sure that system actually exploits an edge. All right, so let's go ahead and get started. So looking up here, this is the portfolio altogether for Morningstar and MLS Swing. You can see here 4,121 trades over the last, from 2012 right over here. You can see here that the blue line is the whole portfolio, and you can see that just a very nice equity curve. Going back to the statistics, we have pretty big kind of total profit right over here. What I want to show you guys is basically the number of months that it's been profitable. So 2 red months right over here on this whole portfolio, which is pretty good. 2 red months out of I would say 10 years. Over the last 10 years, you only lost 2 times, and it's been quite small. It hasn't been like an enormous kind of swing. So you can see here most of the months being green. You can see here that the win rate is 19%, and I'll explain why in a second with this specific algorithm called Morningstar. And the drawdown 16.12%. I mean, that's pretty good. The recovery factor on this is just phenomenal. 16 max drawdown with a profit of 4,305. That's very nice. SQN scored above 2.5, R expectancy over 206. So very nice, very, very nice. Going to the equity chart, you guys can have a better perspective of here. The volatility index below right over here. Going into the trade analysis, you can see here, just basically 2011 doesn't really count, so I'm going to mark that off. But from 2012, 2013, you can see here all the specific stats right over here, which I'll have linked below so you guys can have those stats. And I mean, one of the things whenever it comes to trading algorithm companies is they won't release backtesting results. They won't release even like their methods behind, their methodology behind those testing periods, right? They'll just literally test for 1 year, 2 years, 3 years, and not have no walk forward optimization, no blind testing, which I mean most likely whenever you don't do that is basically gambling, and you can have a lot of overfitting if you don't do that, in my opinion. And looking over here, you can see here just all the years being profitable: 2017, 2018, 2019, 2020, 2021. Pretty good, right? So let's go ahead and go to the individual systems. So this is MLS Swing here. So you can see here over the last 3, 4, 5, 6. So over the last 6 years, it's been making over 384%, which is still pretty good. And the max drawdown here was 11.8%, which is, I mean, that's pretty solid. We definitely beat the market throughout the whole period of 2016, 17, 18 right over here. So you can see the nice equity curve that it was beating the market, and the drawdown was actually not even bad. This is each trade risking 1% per trade, as you can see here. So right over here we have over 698 trades over the last 6 years. So that's very good. That's very statistically significant over that period of time. We have trades with every single month, meaning that we were able to kind of determine a better statistical significance because we know that the system has been going through all the specific phases. So you can see here the system quality number being 2.18, which is pretty good. The winning percentage being 45%, so close to 50% winning percentage, which is honestly pretty good compared to Morningstar. Profit factor 1.8, and monthly average profit about 5%. Average trade, daily average profit 0.45. And so yeah, that's a very nice statistics right over here. You can also see the deviation, the z-score, the win-loss ratio, number of wins, the gross profit or whatever. So very nice statistics here. Let's go ahead and go to the trade analysis. And so altogether over the last 6 years, you can see here very nice profits, very decent consistent gains, P&L by hour, P&L by, let's just say by month. You can see here trade duration. You can see here the trade duration on this. P&L by weekday, profit and loss growth by duration, and just basically here, trades by month, trades by weekdays, trades by year. You can see here the long and short trade. So this is a long only system, and this is for the instrument Nasdaq 100. The reason why I stuck to just this instrument for right now is because that it's one of the most volatile indices right now, and a lot of people are like, oh my gosh, volatile means like big drawdowns. Well, not necessarily. If you know how to manage risk, if you know what you're doing, if you know how to basically exploit specific edges on those current markets. And that's what I've done. See here, very nice equity curve here. And so this is a very nice addition to our portfolio of Morningstar, which is right over here. Let's go to the next trading system, Morningstar. And then over the last, you can see here over the last basically 10 years, it's generated over 8,000%. Now, a lot of people are going to be saying, oh my gosh, that's overfitted. There's no way that an algorithm can do that. Well, number one thing is this is compounded growth as well. Whenever you are trading a longer period of time and you're winning a very, good gains per month, those compounds, add up. So it's definitely possible to hit some of the big numbers if you compound and be consistent. Going to the equity chart, you can see here just very nice growth altogether. During the beginning of 2012, 13, 14, 15, the system did underperform, but I mean, that's completely normal. Every trading algorithm out there will underperform. Not every trading algorithm is going to basically beat the market each year. Not every trading algorithm will have green months every single year. I want people to note that, right? So the whole point of creating an algorithm, a professional algorithm, is to make sure that it makes consistent results while having low drawdown, while making sure that whenever you're going through all these different market cycles, it's so able to rebound from those market cycles. That's 100% key. And it was definitely able to do that over the last 10 years. Bounce back from all the choppiness and volatility, and that's what I like to see. So 3,423 trades. So this one right over here definitely has most of the trades. Profit factor 1.64, winning percentage 14%. Now people are like, oh my gosh, such a low winning percentage algorithm. The reason why Morningstar has such a low win rate is because the risk to reward ratios are much more higher than MLS swing, right? So it basically loses more, but the profits are much more bigger. So just looking at the list of trades, you can see here 4.64, 4.59, 5%, 5%. So you can see here, these wins are much more bigger than the losses, and that's typically what you want to see on a trading algorithm that loses much more than it wins. You want the profits to be much more bigger than the losers. And so, I mean, people are kind of a little bit uneasy saying, oh, 14% is just too low. I mean, to be honest, I'm cool losing about 80%. And that's not even like, I would say, on a normal month. On a normal month, you're typically losing about 50%, 60%. So, it's not huge, and you're still making decent profits, which I'll show you guys in a second. And so you can see here 2021, 2020, 2019, 2018, 2017, 2016, very good profits so far over the last 10 years. So this is a really good algorithm to hedge on both sides, on both long side and both short side. So whenever you're trading indices, it's very important to, number one, make sure you're hedged on both directions, right? You want to make sure that the system is making money toward the long side as well as the short side. So you can see here, if you go to short side, it still made a lot of profits. Long side still made profits. Let's see if we can look at the equity chart. So for the short side, you can see that obviously it did not perform as well. The market for the last 10 years have been going up. So it's, it's virtually impossible to have a shorting system that wins every single month during an instrument like the Nasdaq or Dow Jones. But you can see here that it was still consistent, had a losing year right over here, but pretty good results so far out of that. And you can see here over the overview, 19%, 1,600 trades. Of course, the drawdown says 109%, but that's actually not right. The drawdown does not get that high. I promise you guys. It's just basically calculating, which one has the more kind of losses. And obviously, for the short side, it definitely loses way more than the long side. Completely normal. So you can see here that, still very nice, decent gains right over here over the last 10 years. Going to the trade analysis part right over here, you can definitely see here by P&L by hour that it only trades a specific time during the session, which is part of the edge, which is one of the reasons why it's been so profitable over the last 10 years, because it trades during one of the most profitable hours of the day. So you can see here kind of the P&L years right over here, trade duration, long, short, trades by hour. P&L by weekday, P&L growth, long profit loss, trades by day, trades by duration, So you can definitely see here as well, long short P&L. You can see here that the long side definitely made more than the short side, which I mean is obviously a no-brainer, because whenever it comes to indices, you're obviously going to see the market make more money in the long term, toward the upside, right? So that's completely normal. That's something that I would expect here throughout the years. 2011 doesn't really count because it only took about 1 or 2 trades. 2012, 2% win. 2013, 17% win. 2014, 16%, 11%. 2016, over 49% win on 2016, 17, 18. So very nice, consistent gains over the last 10 years, I would say. And obviously during COVID-19, 2020 was obviously whenever it was able to generate a lot of profit because of the COVID drop. I want you guys to take a look at right over here if we go to the snipping tool. Literally in 2020, it was able to make money during those drops. And I think that's what's key. Whenever it comes to a trading portfolio, you want to hedge on both sides. You want to make sure that you're protected and that you're not able to take huge losses whenever the markets dip. On any stock portfolio. Now, whenever it comes to Forex, you're not really seeing that, but whenever it comes to stocks, CFDs, you're definitely going to need that. So with this 2020 drop, you can see it literally dropped, and the equity curve, which is the blue line for the system, literally made consistent gains, which is exactly what you want to see. The volatility, which is the VIX down below, definitely spiked up, which is completely normal because of the COVID-19. And of course, whenever that big drop comes, you want to make sure your drawdown levels are not like freaking like going like this, like just crazy, right? That's typically what you're going to see during a buy and hold or a martingale or grid system. So very nice consistent gains right there. I was able to generate profits during that COVID-19 drop. Now with the swing system, like I said, it is longs only, but I want you guys to just take a look at this. You can literally see here that in 2020 it was able to still make profits and not lose huge gains on those dips. And that is the whole point of algorithm trading, to make sure that your algorithms can outperform the market in some way, or it can diversify your risk and protect you from the downside. Exactly what algo engineering is. It is not something that is meant to make you a millionaire overnight. It is not something that you can expect to make a lot of money every single day, 10% returns, 20% returns every single week. I mean, that's not what algo engineering is. That's not what algo trading is, right? My whole process, the whole methodology here in AlgoLabs is to create robust and effective trading algorithms that are consistent in the short term and long term and are robust and effective. Now, going to the overview again, I want to just basically mention the drawdown here. Over 31% over the last 10 years, which I mean, honestly, over 10 years is actually not even that bad. Drawdowns typically came during the beginning of the years right over here, and this is risking 1%. So what you can do if you don't want to get into those big drawdowns is just reduce your risk to 1% per trade to 0.5% per trade, or even 0.25%. And that allows you to basically hedge your risk. So if you risk 0.5%, the max drawdown will be negative 16% over the last 10 years. If you risk 0.25%, it'll be close to less than 10% over the last 10 years. So it keeps your drawdowns very low, as well as being able to exploit an edge and make consistent profits. So what I want to go over for the last time here is I want to go over my FX book here as well. Literally, this was a kind of a test to see if it actually worked. Over just a $500 deposit, and you can see here $500 deposit right over here, and it literally just made over, like, I don't even know, like it flipped the account from 500 to I think over $2 million. So the drawdown obviously is going to be 83%, because on this specific test, the risk percentage was 5% per trade. So obviously this was a very much more higher drawdown. But you can see here over the last 10 years with compound growth, it was able to make a very nice return. This is Morningstar with 0.5% risk. So you can see here over the last 10 years, 975% returns. And you can see here the performance. The trade duration, the trades right over here, 2011, 12, 13, 14, 15, 16, 17, 18, 19, 20. I'll have this link below so you guys can have access to it as well. And then as well as going over MLS swing, you can see here very nice consistent returns, win rates, profit factor, standard deviation. Going to the months right over here, 2016, very nice, 2017, very nice, 2018, consistent, 2019, consistent, 2020, consistent, 2021 very consistent. So what I want to also show you guys here is the risk of ruin. So looking at the risk of ruin, you can see here that there's a less than a 0.01% chance of losing 10% of your account. I mean, this is the whole point of why I create my algorithms, is to make sure that they're conservative and they're consistent. Most algorithms out there literally don't even trade with a stop loss, and you have the risk of ruin being up to like 20%, 30% of losing 10% of your account, which means you have a higher risk of ruin of blowing your account over the long term. And so for those specific trading algorithm companies, I mean, there's just, in my opinion, just a whole bunch of bullshit, right? I mean, I've been in the trading industry for a long time. I've been in the trading algorithm industry for a long period of time as well. And I've seen, guys, I've seen how people manipulate people. I've seen literally hundreds of accounts get blown because of these specific algorithms. I'm telling you guys that, yeah, it'll make money in the short term, but I promise you, it will blow your account in the long term, guys. I'm telling you guys, I've seen it all. I've seen people blown their life savings, blown their accounts to shreds, and it's just like, it just made me feel really terrible. These people have been lied to. These people have been manipulated by these algorithms that, first of all, are not even tested over the long term. There's no walk forward optimization. There's no blind testing. There is literally no professional testing on these algorithms, right? There's even no stop losses on some of these algorithms, and literally, like, that's the most stupidest thing in the world. And yeah, it'll grow your account, but blow your account in the long term. I guarantee that as a fact. So I'm telling you guys, if you guys are with those companies, I would recommend leaving as soon as possible, because I mean, those companies are not there for your benefit. They want just the money, they want the marketing, they want to sell you those algorithms, and they want you to sell those algorithms to other people so they can make more money. And it's just, I'm so fed up with the bullshit, right? I've been in this industry. I've literally been in marketing teams with them, marketing these products whenever I was much more younger and much more mature. And I know the lies that they fed me and the lies that they feed everyone. I mean, literally, Silverstar Live, one of the companies that I got introduced into trading, the CFTC literally fucking like went all hell loose on them, and they're having to pay millions and millions of dollars to the people that have been scammed. So I say this as a warning. Be careful of those companies. Do your research, right? You know, whenever it comes to trading, there's no quick get rich scheme. People want to make money fast with these trading algorithms, and that's simply not a very realistic thing. So I say to you guys to be careful about those trading algorithm companies. Most of these trading algorithms are grid algorithms or martingale strategies or algorithms with some order stacking, dollar cost averaging. Most of them don't even have a stop loss. Some do. I'm telling you guys from experience, like here on AlgoLabs, I'm going to do it right. I'm going to make sure that, you know, I build a foundation. I'm going to make sure that there's going to be a new fucking age, a new fucking company that does this the right way, the most professional way, and making sure everyone freaking understands, like, these scammers out there, these people who literally just want the fucking money. They're not there for the algos. They're literally just there selling these algorithms for money, knowing that these algorithms are fucking complete bullshit. I remember over 2 or 3 years ago, there's this company called EA Economy, and I remember basically my brother was there. He was kind of a marketer, and I was just there looking at the algorithms, and they were running a specific software called Hamilton, and I forgot the other algorithm that they had also back then. But literally, these algorithms would literally be fucking order stacking over currency pairs. And I remember it was literally, I think, interest rate cuts for the Federal Reserves. The interest rates got cut, and the markets were just freaking wild. And I literally saw with my own eyes a $500,000 account, a $500,000 account get blown using those trading algorithms, being lied to and manipulated by those companies. So I tell you guys to be freaking careful with these companies. Do your research and make sure that you're investing into something that's for the long term and not for the short term. One last thing before I go, I want to go over my website. So AlgoLabs.net, just a very easy to remember website. We click on that and we go to the website right over here. And so if you guys are wanting to join AlgoLabs, make sure to come all the way down here. We have a lot of information here as well. And I want you guys to come down here. You also have the reports here. So if you guys want to access the reports, all the reports are here. So you guys can go ahead and look over that yourselves, and go down and just basically put your email address and sign up. So that will help me just basically give you guys updates of the launch of AlgoLabs and just give you also cool discounts in the future. So without further ado, thank you so much for watching this video. Let me know if you guys have any questions at all, and I'll see you guys in the next video.